What's going on, guys? Welcome back to day 9 of the mentorship. I apologize for the late post. I had to help a lot of people, like about 3 people actually evacuate, had to help move stuff. They're very close friends. All their houses are gone, unfortunately, but I ended up helping them evacuate, and thankfully they're all safe. But now I'm back home and I'm ready to get this out. So today we're going to be going over candlestick anatomy and just, kind of things in terms of institutional clues and things along those lines, but mainly just candle anatomy, right? I'm going to keep this video quite short and just pretty simplistic so that doesn't have to be complicated or confusing for you guys. So without further ado, let's go ahead and get started. But first, make sure to go ahead and leave a like on the video and subscribe because we got so much more coming, and y'all are not going to want to miss out on the rest of this mentorship. Candle anatomy and institutional clues, right? So first, if you look at a candle, right, let's just get the basics over with, okay? There's 2 types of candles, right? A bullish candle, which means an up candle, and there's a bearish candle, which means a down candle, right? Each candle has an opening price, and each candle has a closing price. So let's go ahead and take a bearish candle, for example. So if you go ahead and look here, let's just look at this 2:30 p.m. candle, right? So this is a bearish candle, meaning it's moving down, right? Clear as day, it's moving down. The open of a bearish candle is going to be at the top. And you'll notice that this candle does not have a wick. For now, I'm just going to tell you guys where the opening and the close of the candle actually is. So right here, the top of a bearish candle is the opening price. And then the bottom of it is the closing price. The exact opposite goes for a bullish candle or an up candle. The opening price of a bullish candle, if you look down here at this 1231, the opening is the bottom and the close of a bullish candle is at the top. All these wicks is just a trace of where price was. Think of it like a snail trail, I guess. That's the best way I could put it. So at some point, this candle here was bearish, and I'll show you what I mean. It was black. Watch. You go here, boom, it was black, and then boom, it leaves the wick. This candle was green up to this point, and then retraced back down and closed at this price here. So that's basically just the basics of candle anatomy in and of itself, but we're also going to get into a bit more of like I guess an advanced way of looking at it. But again, you're supposed to keep this simple and not really overthink it. My goal is to make it as simple and as confusing free as possible, okay? So if we go back down to here, right? The body shows the momentum of the candle. Large bodies suggest institutional displacement, which means it's probably going towards a certain drawn liquidity, but that could also be some sort of fake out. So you want to be careful, right? You always have to look at price and see where it's reacting off of, the drawn liquidity, all those things, right? Now, the wicks indicate liquidity grabs or rejection zones. So if we go back to the chart, you can see that this wick got left behind. And what happens after this huge wick gets left behind? We get a move up, right? So at this point, we had a rejection of price coming off of this level here, which then shot price back up to the end of this range here, right? The London high, this high up here, and obviously this high right over here. My magnet's not on. This right here. And you'll see that it trades up into an inefficiency, which holds price and then sends it back lower, right? A bearish gap, bearish for value gap. So that's what I mean by wicks actually showing institutional play and showing what they want to do, right? Same concept applies here, right? We get a rejection, boom, another rejection, price trades higher, right? You can see here we have a little bit of an accumulation zone, okay? We get a rejection, accumulates, another rejection, price, sends lower, accumulates again, we get some wicks up here, and then it sends lower, right? Same concept applies for every single candle. You can see all the wicks here, right? This wick up here manipulates the New York AM highs and then immediately displaces lower, right? So that is basically what I mean by the wicks indicating liquidity grabs or rejection zones. And all I mean by rejection zones is, a fair value gap, an order block, a mitigation block, which I will get into later in the mentorship. But that's basically what I mean, right? We went over the open and the close, right? Highlight key levels where institutions may engage, which is what I highlighted for you guys over here with these examples that I showed you. The bullish example here off of this rejection, and then the bearish example off of these rejections here. Same thing, right? So there's also smart money candlestick patterns, right? I don't usually like to look just straight up patterns. I like to look off narrative and draw on liquidity, right? So if you look at like a large displacing candle, right? These large displacing candles usually begin with a big move with very minimal wicks to show the institutional intent or show where price wants to go, right? All I mean by institutional intent is basically just saying, okay, where is price drawing to? Where do we get that final leg of displacement before it actually means that we're going to start trading towards that drawn liquidity? That's what I mean at this point, right? You could also look at retracements into gaps, right? Imbalances, fair value gaps. And those could be entry points as well. But I don't enter off just straight fair value gaps. I'm an inversion type of guy, okay? And again, wicks here, right? The lower wick, sell side liquidity grab for bullish intent, and the upper wick is a buy side liquidity grab for bearish intent. And that's exactly what I meant here. Buy side liquidity grab for bearish intent, right? Sell side liquidity grab for bullish intent. It's very simple, guys. It's very, very simple, okay? That's all I mean by that. So you have price action context. I wanted to include ICT concepts in here just because, you know, it's basically the same as SMC, but yeah, I just want to throw that in there. So obviously we have liquidity, right? Candles will often sweep liquidity before reversing, which is a stop hunt. So if you look at the chart here, what's resting here? These are sell stops because people who are longing have their stops down here, and vice versa. People who are shorting have their buy stops up here because they're selling and they're putting their stops up here. So if price goes up there, they'll get taken out of the position with the buy stops, okay? It's very simple, very, very simple, okay? If you look at order blocks as well, order blocks have institutional candles that leave untested zones or where entries align with their open or close, right? And I don't mean an open or close of an order block. I mean an open or close of a candle that is within an order block or something like that, right? Like if you look here, this is a bearish order block, right? You have the leg up, sweeping liquidity, followed by a leg down. And you'll notice, right, this opening price of that bullish order block is where price rejects from before going lower to take out the New York PM lows, right? So that's basically what I mean when I talk about order blocks and where the opening and closing price of those makes sense. And then of course you have fair value gaps, right? Gaps within large candles often signal smart money footprints. If you look at every single gap, if it's in line with the drawn liquidity, it's going to respect. What I mean by that, if price is bullish, it's going to respect bullish PD arrays or bullish gaps, bullish order blocks, bullish mitigations, and vice versa. If price is bearish, it's going to respect bearish PD arrays and disrespect bullish PD arrays, right? So again, it's a very simple concept to understand. If you still don't understand it, go back and, you know, rewatch the video or watch certain segments of it. If you guys have any questions as well, I'd be more than happy to answer them in the comments below, or even make a video if it's a topic that a lot of people are confused about. I have no problem making another video on that. So just leave a comment and give me feedback on it, because I wanna help you guys as much as I possibly can. So again, like I said, this is gonna be a very short video. This is all I really wrote out for the notes section here, so you guys can, you know, screenshot this, you can jot this down, do whatever you need to do, put this in your phone. I don't care. Whatever you want to do it. All right. So I'll leave you guys there with that. Obviously, I didn't trade today, nothing like that. I went and touched grass. I went and visited Malibu and helped some friends evacuate, which, you know, it was a pretty sad day today, unfortunately. But, you know, things happen, and, you know, it's out of our control. And, you know, at the end of the day, we have to let God take things into His hands, and we just have to have faith at the end of the day. So with that said, guys, make sure to leave a like on the video, subscribe to the YouTube channel if you haven't already, and I will catch you boys tomorrow for NFP Day. Peace.